All right, let's get started. Today, I'm going to share with you the next short squeeze stocks and why I do not think that this is a smart investment strategy moving forward. You're not going to want to miss this. So you heard right. I am about to share with you 10 different stocks that should be on your radar in case they are the next GameStop or AMC. However, let's quickly recap what's been going on and get a good working definition of words like shorts, short squeeze, and then moving forward, why I think it's a bad idea to invest this way. So the story goes that in September of 2019, a Reddit user started to notice that there was Wall Street hedge funds making shorts or bets against GameStop stock. Now, a short means that someone is going to bet that the stock is going to go down. At some point in the future, they're going to have to buy the stock to essentially cover their bet. And their hope is that it does go down so they can buy it at that cheaper price. They pay back what they owe and they keep the difference. Shorting stocks is a very risky way to invest. There is a place for it in the market. However, most people are not sophisticated, accredited investors. So the fact that this is even on our radar is news. Now, as this Reddit user and a number of other subreddit groups began to dive into the research and analyze GameStop, they noticed something very interesting, the possibility of a short squeeze. The term short squeeze means that as prices begin to rise, all of those people who have short positions get squeezed to close out those positions. They essentially have to buy the stock higher than what they bet. As a result, they lose money and the price of the stock itself is driven up higher and higher. See, many hedge funds like Melvin Capital usually hold on to short positions for years, basically as long as it takes and as long as they keep making money. But with the idea of this short squeeze against the hedge funds going viral in places like TikTok, YouTube, and eventually the mainstream media, more and more people began to buy shares of GameStop, and as a result, the hedge funds lost a lot of money. However, this story does not necessarily have a happy ending for many people because on January 28th, just when this story was going like volcano mode and everybody was looking to buy GameStop, trading was halted. In fact, the ticker symbol for GameStop was taken off the Robinhood app. Essentially, investors like me and you weren't allowed to buy anymore. And if we were holding this stock, we were allowed to sell. Some are calling this market manipulation. Robinhood has released statements that it was necessary for them to get enough capital to make sure they could cover their collateral at the clearinghouses. And if you understood any of what I just said, then you're a much more advanced investor than me because that sounds like a bit of smoke and mirrors. But I don't want to get too worked up about all of this. I should say as of this recording, those limitations have been lifted on all but 5 stocks. Can you buy some? Yes. Can you buy as much as you want? No, and you're limited to a certain amount of buying per week. Which brings us to the purpose of this video. What's next? If this short squeeze mentality, if this viral groundswell, this community-based investing is going to continue for the next few weeks or months, people, myself included, are going to be looking for what is next. You may have already started to hear stories of people buying Dogecoin or silver, but I wanted to present an investing thesis, an experiment, if you will. So I posed this investment experiment on my private Facebook group. Feel free to join there. And I said, here's the deal. I'm going to pick 10 stocks that are all heavily shorted right now that are under $10. I'm going to buy an equal share of each, $10, $10, $10 for 100% pie. I'll put that pie down below in the description. And now I personally don't feel that this is the best investment strategy. My hypothesis is that a few of them are going to go up, a few of them are going to go down. Maybe I'll make a little bit of money, but I also have the potential of losing money. And I want to track this over time. You see, because the only way to actually make money in a short squeeze is to get in early. All of the people who got in the week trading was frozen on Robinhood probably bought GameStop at either $200, $300, maybe even $400 per share. However, the people who got in early at maybe $20 or $40 a share, they made 10 times their money. So you can see that this is definitely more gambling than it is investing. And I am a proponent of index fund investing, long-term buy and hold. And I do have a portion of my net worth in things like dividend funds and cryptocurrencies, specifically Bitcoin and Ethereum. I'll go ahead and put up on the screen right now. Here's my pie. As you can see, I've got about a 10% stake in each of these different funds. Some of them you might recognize, like Sirius Satellite Radio. Others you have never heard of, and nor have I. I was looking for shorted stocks that were $10 and under. You can kind of see how this is essentially just guessing or speculating. So by no means is this investment advice. I am simply doing this for educational and entertainment purposes. And if you'd like to follow along, again, the link for all of those stocks are down below in the description. Now, I'm not going to leave you hanging, so I'll read off those ticker symbols and flash that on the screen one more time. We've got DVAX, SENS, MUC, CLVS, SIRI, TXMD, LCI, KIN, OPK, and PGEN. I'll put a little analysis and write-up about each on my website, so be sure to check out that blog post, which will be up later this week. All right, let's recap. The short squeeze investment strategy is one that people are going to begin to try more often. It is a gamble. It does not necessarily have its place in long-term investing, but I think the best way to learn a lesson is to actually put your money where your mouth is and try it out. I am not looking to make a quick buck, but I will take it if this works out. Along those same lines, I'm not investing any money that I need to count on to keep the lights on or put food on the table for my family. Rather, I am a finance YouTuber who makes content on what's happening. And as the world continues to evolve and investing becomes more social with things like apps and online forums, I plan to be there as a resource for you to help you along the way. Please be sure to like this video, and if you're new to the channel, hit subscribe and ring that notification bell. Hey, you can also check out a ton of resources on my website. We're talking blog posts, other videos, even podcasts, so check it out. All right, as always, I'm Rich, and until next time. If you're new to the channel, check. Everything looking now. As always, I'm Rich, and until next time.